Hello, Nina Gonzalez, home loan expert with Altera Home Loans. Now, I always get questions from new buyers. I get a lot of questions, and I've compiled a list of the most requested and asked questions, and hopefully I can bring some clarity for you with this short video. I have been doing mortgages for an extended amount of time and have lots of experience with her first-time home buyers. Most buyers are really concerned with credit and their credit score. That's the number one question that I receive when consulting a buyer. It's always, how does my credit need to be? What is the credit score? Well, in this scenario, as a first-time home buyer in today's day and age and the amount of programs available, you can be a 580 credit score allows you to use the FHA down payment program with 3.5%. For conventional loans, you usually want to be at 620 to 640 credit scores. And for any investment property or multi-unit purchases, you want to be above the 680 credit score range. That doesn't mean with an FHA loan, you still can use the 3.5 down payment option with the lower credit score. It's more when you're going conventional. I always highly recommend that we focus on fixing our credit and getting it at the highest scale in order to save on down payment and fees, because credit score can affect those factors. The next question, down payment. That's another thing that is asked. With more lenient programs, you can utilize down payment assistance for the down payment of your primary residence. There are options where you can use local down payment assistance programs where you can utilize gifts from family members, and you can utilize programs from employer-based programs. For example, I know Northwestern had a program that helped their employees, but it has to be an existing program, so you can utilize down payment from different options: your own savings, your 401k, a gift from a family member that categorized as parents, children, in-laws, and siblings, maybe even grandparents. The third most requested topic from first-time homebuyers is income and job. Yes, you want to be fully employed, either self-employed or fully employed, for the last 2 calendar years and have taxes, file taxes to support that income. There are some options where you don't have to file taxes. Those are usually Social Security, or if you have any kind of government-based income that doesn't require for you to file taxes on. You would provide your last 2 years of tax returns and your 1-month bank statement to ensure that you meet with the program requirements to document your employment history. You want to have the same line of work for the last 2 calendar years. And if you change to different companies, that at least be in the same type of field. So you can have multiple employments, but they want to be in the same field. If you are self-employed, you need to be self-employed for the last 2 calendar years in order to utilize that income effectively. There are ways that you can be self-employed for less, but you want to sit down with your mortgage consultant to really review that accurately to ensure that you have all of the proper paperwork in order to use less than 2 years of self-employed income. I hope that helps. Another question I get a lot of, it really is for the realtors. They ask, what areas should I buy in? What school district should I get? What kind of property type should I get? So that is really where I redirect my buyers to work with their trusted real estate agent in order to ensure that they get all of those answered properly. They're always asking about multi-units. I will deviate a little bit from the real estate agent and advise them the parameters for multi-units, how to qualify for multi-units, and if you do intend to purchase a multi-unit, the prospect income from those second units can help you qualify to get more purchase power. It can be considered part of your income if you're looking to purchase a multi-unit. For example, if you have an idea of purchasing a 2-unit property, the proposed income from that second unit can be used, the proposed rental from that second unit can be used towards the purchase of your new home and help you qualify to get that mortgage for that loan amount. And finally, one of the big ones that I get is, who else do I need? Do I need an attorney? Do I need a real estate agent? Do I need a home inspection? So there are many players that are a part of your real estate process when purchasing a home. It starts off with, your real estate agent. The realtor is really going to be out there advocating on your behalf, taking you to different properties and ensuring that these properties meet your expectations. There's me, the loan officer, that squares away the financing for you to be able to purchase this property. There's the attorney and home inspector. They will all come into the transaction after you've located and found the ideal home. A home inspector will go in and inspect the property to ensure that it meets all your requirements and the functionality of the home. A contractor, an attorney, will also be there to review your contract and represent you at closing. Then you have an insurance agent who offers the insurance to protect your home, and the closer at the title company. That will be the final person or the final party to conduct the closing, and there at that closing is where you get your keys. I hope these questions were helpful to you. Please make sure to reach out to either myself or Makita for any other further questions regarding your home buying process, and enjoy this home buying challenge. Thank you. Loans by Nina on Instagram and Facebook.